We started a business 30 years ago with two couples, and it's been fairly successful, but we have a shareholders agreement which we insured through our insurance, so if one of the partners died, we wouldn't be dealing with their children.
Right.
Are we totally underinsured right now because of the CDA being going away, where insurance normally goes into CDA?
Yeah, so, okay, so the question is, typically, let me just reframe this question. Typically, when people are in business together, they often have a shareholders agreement, and often in the event of death, they insure it with life insurance because, let's say each partner has $1 million worth of shares, they buy $1 million worth of insurance, and they use that insurance to be able to buy out the estate or the spouse of the deceased shareholder. So that's extremely common, happens all the time. And under current rules, that $1 million is not only tax-free to the company when they receive the insurance money, but it's distributed to the estate or the spouse or whoever the beneficiaries are on a tax-free basis through what is called the capital dividend account. Now, there were rumors that in changing or eliminating the capital dividend account, that they would use that to apply to life insurance. Based on discussions we've had with a number of organizations, the one that's leading the charge here is CALU, which is based out of Ottawa. They feel that, number one, that is not actually an intent of the government with the new rules at all, but they have insisted that the government make sure that that is absolutely clarified by them, because tax rules affecting life insurance were actually modified in a significant way about a year and a half to 2 years ago, and the capital dividend account was deemed to be something that needed to be kept. So the other problem with changing the rules on the capital dividend account on life insurance is, let's say you said, are we underinsured? Well, let's say you were underinsured because of these new rules and making there a bigger tax problem for the buy-sell agreement. What if you're uninsurable and you can't get the insurance? The fact is there's no guarantee that you can. So I think it's going to be difficult for a government to say, we're going to tax something at a higher rate and you have no way of replacing it. So the best we can hope for, because we don't have 100% clarity on that, is that our understanding is the intention is to not take away the capital dividend account for life insurance. We'll know more when we actually see some rules.